Let's get chatting about the markets. Then we have Trideep Bhattacharya, Chief Investment Officer, Equities at Edelweiss AMC, who joins in. Hi Trideep, always good speaking to you. Well, you've said in the past, the financials are in a sweet spot and valuation-wise as well, you're fairly comfortable out there. But from the last time we chatted, well, that index and those stocks continue to go higher. What's your take? Do you allocate incremental money out here? And particularly, what about the PSU banking names? The party is on out there.
Yeah, I think, first of all, thanks for having me on your show. Always a pleasure. Yes, we have been overweight financials as much as possible in our portfolios, and that's worked out well so far. I think heading into Q3 and Q4 numbers, I would probably keep on those bets. And I think from a next 3 to 6 months perspective, I would say financials will actually score over some of the other sectors in terms of delivery of numbers. So as you know, we are a big fan followers of where earnings upgrades are likely to come. So particularly the private sector banks is something that we would kind of, hang our hat on and continue to be overweight on in our portfolios. Public sector banks, of course, have joined the rally of late, and there is a valuation catch-up that is happening to different extents, depending on where they were trading at. But I think at some point we would be kind of, a little careful about extending the rally in PSU banks. We are overweight, some of the largest private sector banks in our portfolios and stuff like that. So we are playing this, but we are mindful that of the valuation catch-up, and at some point moving back to a slight bias towards quality.
Trideep, afternoon. Rima here. So after a record-setting equities buying spree over 6 quarters, which almost single-handedly lifted India's equities in an otherwise tough year for emerging market, India's retail participation activity is showing some signs of fatigue. The ex-SIP number has been negative now for a while, the discretionary money. What have you made of the flows, and is this going to be a big decisive factor on whether India continues with its outperformance? And tell us, what are your channel checks? What is it that you are seeing at your AMC when it comes to retail participation?
Yeah, great question. So I would say that, as always, investors follow, in my opinion, where earnings upgrade is likely to happen going forward, in my view. That's where money flows. And I think overall, so far, one of the reasons why money has continued to flow in India and domestics replaced FIIs has been the fact that on a relative basis, for sure, and even in absolute terms, our earnings upgrade story of India Inc. has been fairly robust. I think over the next 3 to 6 months, that will be tested, though. We have seen a good round of rate increases both in the United States and different parts of the world, including India. How that has an impact through the economy in different sectors will actually be felt over the next 3 to 6 months. So I think we've got to be very careful about the earnings upgrade story going forward as well. Certain pockets will continue to do the same, and that's where we are positioned. And we will continue to encourage investors to look for those pockets which can survive through the impact of rate increases onto the economy from the next 3-6 months perspective. But that's the short term for you. Beyond that, I think heading into 2024 elections, the government mood would be pro-growth. The capacity utilization in India is roundabout somewhere between 70 and 75%. So corporates are deleveraged and inclined towards more capex. And finally, the lending part of the financials, having got their books clean, would probably still have a clean run from 1 to 2 year perspective. So putting all of these three together, I would say that next 3 years probably looks pretty robust from an Indian economy standpoint. Next 3 to 6 months, we have to kind of let the impact of rate increases wash through the economy, and then we have a good run from an earnings upgrade standpoint, which in my opinion is what the key metric we should follow.
Trideep, to that point, I think at least retail investors, right? I mean, they're looking through the next more than 3 years, right? Bring it on, and we'll stay invested and kind of look to reap the rewards 3 years, 4 years, 5 years out. That seems to be, at least so far, that it's been very, very steady flows, etc. Of course, despite the recent volatility and the dip that we've seen on the discretionary side. Now fertilizer is a space, Trideep, I wanted your thoughts, and not just fertilizer companies, but companies in the food sort of arena. But my conversation today was with the fertilizer secretary. I started, of course, on the fertilizer bill, which is, of course, over 2 lakh crores in 23. the fertilizer secretary told me that they expect the bill to drop in FY24. Of course, I mean, it's a big macro negative. It's a number which is very, very large. Although companies are getting sort of reimbursed on a pretty quick basis, so there is no impact on that side. The other more interesting thing was on, this nano fertilizers, urea, nano urea, nano DAP, which over the next couple of years is really going to revolutionize the fertilizer sector. Much higher efficiency, and subsidies also will go down to almost zero, is what the secretary told me. Listen in, then I'll come to you for your thoughts.
Because of geopolitical considerations in the world and various factors, the subsidy amount has gone up, and it's always a challenge for the government to find funds. But it's a question of priorities. If farmers occupy the highest priority for the government, then the government will ensure that funds are made available. And that has been happening so far. Even though prices have gone up internationally, the government has chosen to increase the subsidy burden and not to burden farmers. So, as I said, the government is fully committed to ensure that sufficient, adequate supply of fertilizer is available to farmers, and it is available at reasonable rates. That commitment is there, and therefore that will translate into action on the funds front also. So I don't foresee any problems. If there is a further requirement funds, we will be going to Finance Ministry, and we have been assured that whatever is required would be provided. It's very difficult to give a number right now because the prices of gas will fluctuate. We don't know what the prices are going to be in January, February and March. And urea, as you know, largely depends on the prices of gas. So we don't really know how much the subsidy burden is going to be. Similarly, the prices of potash and the prices of phosphatic fertilizers also keep on changing. So it's difficult to put a number to it. So prices are coming down, and that applies to phosphoric acid, rock phosphate, everything. So we do hope next year there will be a lesser subsidy burden. And the other important thing, of course, is that we have nano urea now, which is part of the supply chain. So next year the manufacturing capacity of nano urea will go up. We plan to make about 17 crore bottles of nano urea, which are equivalent to roughly 75 lakh metric tons of urea. So that also would contribute to reducing the subsidy burden. We are hopeful for a substantial reduction.
So that's the fertilizer secretary talking about the nano fertilizer. Nano urea is already there. Nano DAP is being developed by companies like Coromandel along with government institutions, and that should be out in the market by the middle of next year. Trideep, any thoughts on names like Coromandel, or anything else in that space that you've owned or you'd like to own?
So we certainly we've been positive on the way the government has been able to really improve the productivity within the farmers, or at least create an ecosystem so that the productivity is looking to improve. One of the historical setbacks has been that our agriculture sector is not as productive as particularly as compared to when we compare globally, and it adds to a significant amount of subsidy government for the government as well. So net it didn't benefit anyone. But I think what the government is trying to do is, if you look at broadly the agriculture sector, whether it is sugar, fertilizers, etc., is to kind of get the bottlenecks out of the way, whether it's through innovation or taking the excess supply out, like in the case of sugar, and enhancing the productivity of the different sectors. I think it is a win-win situation for the corporates, because at the end of the day, they can get what the price that they want, and for the farmers, as the productivity increases, their crop increases, and their total value intake also kind of goes up. So I see this as a long-term positive. Short-term could be a bit of a hiccup particularly given the elections are there or thereabouts. But one of the things that government has done positively over the last 3-4 years now is not to lean too much on subsidies, or for that matter increasing the fiscal deficit burden, but more towards productivity and more towards structural growth over the long term. I think that has held steady, held good from a market's long-term perspective, and will continue to be the same going forward as well. That's what I would have to say in this.
All right, Trideep, final question from my end then. How are you placed on the IT space? Getting diverging comments out here. I think just a month or so ago, people are saying maybe the worst is behind. Then the HCL Tech shocker came when they said all of a sudden that we're going to be meeting the low end of the guidance. What's your sense on the space as of now? Stay away, or a good time to build a longer-term portfolio?
I think people are getting a little too excited about the sector overall too soon. I think we are in the process, in the bottoming out process over the next 3 to 6 months. And this is one area where some of the global weakness in demand we will come to know in IT budgets, as I've told in the previous interview as well, in the first quarter of next calendar year. Getting ahead of that could be troublesome, which is what we saw in the last month or so. I think as we get to Jan-Feb time frame, companies kind of put to bed what they're hearing from clients and put towards their outlook for FY24. I think there is some more earnings, probably downgrades, that is still to happen before we can say that the sector is safe to invest from an earnings standpoint and also from a valuation standpoint. So a bit more room to go on the downside, but worth keeping the sector on the watch from a next 3 to 6 month perspective.
Okay, one of the important data points to track, Trideep, will be the Accenture numbers. They come out on Friday, Thursday night or Friday. So that's going to be very crucial. It will be Q1 FY23. So will they continue to maintain the guidance that they had given 3 months ago, or is there going to be a guidance cut? So Accenture numbers at the end of this week will be very, very crucial. Thank you very much, Trideep, for joining in. Let's get back to Mitesh Thakkar. He can tell us what you can buy today.